Good
you for having
evening.
me on the show. Good evening to all the viewers.
Yes, good evening. Now let's get started. First query is written to us from Ravi Shankar, and he holds 741 shares of Bandhan Bank at 191.7 rupees, which is equivalent to 192 rupees. Although he's looking for both short-term and long-term, outlook on the counter, but since our fundamental guest is not present yet, so Gaurav, I would like you to only shed some light apart from the charts as well, that how are you viewing Bandhan Bank? Firstly, because there is some stress in the MFI space, and in which even the bank's MD, while speaking to NDTV Profit earlier, he said that there will be some sort of pressure there in H1. But how do you view this bank in totality, and what are the charts suggesting?
Yes, so firstly, Bandhan Bank has started recovering after the recent slide that we have witnessed, which came in somewhere in the in the later of 2024, when the stock was trading somewhere around 200 to 20 levels. It slipped to as low as 128. So that was nearly a 100-point slide there. Currently, the stock is recovering from that phase. So technically, the stock is looking upbeat, and 200, 210, 220 is the immediate targets that I'm eyeing at. Now, when we look at some of the other factors, while considering a stock, it is very available at a very low PE. The it is a fairly dividend paying stock. Also, when we look at the the PAT numbers are also somewhat on the declining side. So that was the primary reason why we witnessed some kind of a sell-off here. So a recovery is pretty much on cards. I think if someone has a potential to hold the stock for the next couple of quarters, this stock will even can rise up to 250.
Okay, thank you so much for that, Gaurav. Now we have another WhatsApp query. So Mahesh holds 186 shares of Asian Paints at 1010 rupees. He's looking for both, again, long-term and short-term view on the counter, but I would like you to also shed some light in the paint sector in particular. And if we talk about Asian Paint, so how well is it positioned as compared to its peers? And if you look at the charts as well, so what are the key resistance and support levels that you're seeing there?
Yes, certainly. So first of all, I'll talk about the Asian Paints as on the technical side. It is underperforming from year and a half. We have to look Asian Paints from a much longer perspective, because this has been one of the most favorite stocks, and for decades now. And you will find it in most of the portfolios, most of the mutual fund houses, most of the PMS have been holding the stock. So much talked about stock because of some negative reasons, that is underperformance. The stock is not picking up with the markets. What we have seen in the past couple of years is that in past 3 years, the stock has not been able to perform. It is just trading around a similar kind of a trajectory. Recently, it even saw a breakdown from that, and the underperformance is majorly due to the news coming in of some other larger players entering the market. We also have to understand the Asian Paint has been the largest paint manufacturer for the Asian subcontinent, and since we now see a lot of larger players like Adani entering it, JSW entering it, so this comes out to be a threat on the larger segments, that what kind of new business momentum will turn up. Market share will certainly be divided. So I think it will require a few more quarters to understand how things come up now. Technically, it is still looking quite weak. No such buying interest is witnessed. It is clearly laying low. So as of now, neither it is good for a trading perspective, not from a long-term perspective also.
Okay, so that's an exit and a sell view on Asian Paints for both long-term and short-term perspective. With that, we are joined by a first caller on the show today from Gujarat. Hi, Madhukar. Good evening.
Good evening.
How can I help you today?
I'm doing very, very good. How about you?
Yeah, I'm doing very well, Madhukar. Please go ahead with your query.
I have two questions. I have a share of Motherson Sumi Wiring,
Okay.
890 shares,
Yeah.
at the rate of 61.4.
Hmm.
And I want to invest more in that share.
Okay.
So what is the future? And
Okay.
I want to invest in one share, which is PN Jewellers.
Okay.
Just,
Madhukar,
yeah.
I'm just afraid that we'll be able to cater to only one query at a time. So, can I pick PN Guild for now?
Yeah, please take it, PN Guild.
Okay, understood. So, Gaurav, coming straight to you. Firstly, he wants to invest in PN Guild Jewellers, and talking about the global uncertainty situation, and investors are invested in the jewelry space in particular. They want to invest in the counters which are like safe for them. So that's when the jewelry space comes into play. So firstly, is PN Guild Jewellers a correct choice for our investors who want to invest in the jewelry space? And currently it's trading at 579. So are these the correct levels to enter?
So firstly, I think the brightness in your eyes just tickled in the moment you started speaking of a jewelry stock and gold. Why not? So a female's first most attractions are gold and diamonds. Now coming on to the query here. So 620 is the level which I am eyeing at. Once the stock is able to surpass that level of 620, it has potential to rise up to even 700, 740 levels in the coming months. As of now, the stock is little bit struggling around its 100 and 200 period exponential moving average, trading below its long-term average. So a breakout is much more warranted for a fresh up move. He has talked also about M-Sumi. So among the two, I'll prefer M-Sumi as of now.
Okay. So although we were sticking to one query, but our experts are very kind enough. Madhukar, if you're there listening to us, your question has been answered there. With that, we have a caller joining us from Chennai now. Hi, Vishwanathan. Good evening.
Good evening. I want to know about Bank of India, madam.
Okay. So have you invested in the counter?
Yeah.
Okay. How many shares do you hold, Mr. Vishwanathan?
100 shares at the rate of 115.60.
Okay. And are you a long-term investor or a short-term investor?
No, short-term. I want to know this July month I'll get 5 or 10 rupees.
Okay, so just 1 month view on the counter. Well, that's pretty short, outlook. Short-term outlook. Gaurav, coming to you, what's your sense on Bank of India and what advice you have for Mr. Vishwanathan there?
We are positive on the PSU banking space. Stocks like State Bank, PNB, Bank India, Canara Bank all look good to us. They are well placed at the current levels. Bank India is currently trading around at 117 odd levels. Since it is a very short term view of just about a month, first of all, I'll advise the trader to take a stop at 110 on closing basis and hold on to a position. I think a level close to 120 to 125 zone can quite easily be achieved.
Okay. Thank you so much for that. Now let's go across to a caller joining us from Noida. Hi, Amol. Good evening.
Hi, good evening.
Yes, how can I help you today?
Actually, I bought 500 shares of National Fertilizers Limited.
Okay.
And my buying price is 96 rupees.
Okay.
And today the stock corrected a bit around 0.5%. So I just wanted to know, can I add more now at this level?
Okay.
Because I want to play this monsoon card here.
Okay, so you're a short-term investor. Yeah.
Right.
Understood. So, Gaurav, without wasting much time, are these the correct levels to accumulate more? And since the stock has fallen, but it has risen from the point where Mr. Amol actually bought it. It's currently trading at 100. But do you advise him to accumulate more?
Yes, he can add more, to a condition that he would strictly maintain a stop at 94, because if that level is taken out, the stock will head towards 80 levels. That will be a breakdown point. So as of now, he can consider adding some more quantity here. and 105, 102, 105 would be the upward triggered level, and thereafter a journey towards 110, 115 levels can be seen in a month or 2 months time frame.
Okay, okay. Thank you so much for that. Now let's go across to another caller joining us from Nellore. Hi, Siddharth. Good evening.
Good evening, ma'am.
How can I help you today on the show, Siddharth?
Ma'am, I want to invest in Vedanta for a regular dividend income purpose, ma'am. Can I invest for long term for getting regular income?
Okay, okay. I'll get your query answered, Siddharth. Gaurav, although the question is for long term, but still I'd like you to help us, with this counter. Vedanta currently is trading at 456 and was also up in trade today over 3%. So what are the charts suggesting and what patterns are you seeing there? And is it like an attractive bet for long term?
Yes, he can invest in Vedanta with a long-term perspective. Vedanta comes out with a very healthy dividend yield, as he has mentioned. I think he must have done his homework first and looked at a stock which is among the highest dividend-paying stocks. I will also suggest him to add IOC for that matter if he is looking at a dividend income specifically, because even IOC comes up with a healthy 8.5% of a dividend yield. So he can diversify his stocks and still get attractive dividend income.
Okay, okay. Thank you so much for that. We have another caller joining us from Pune now. Hi, Ashish. Good evening.
Hi, good evening.
Yeah. How can I help you today?
I have Cochin Shipyard at 2220 price.
Okay.
50 shares.
Yeah.
So wanted to know for a short term, 1 to 3 months.
Okay, okay. A 3 months picture on Cochin Shipyard, because Gaurav, these defense stocks saw a rally and especially, during Operation Sindhu, all the defense stocks were seeing an uptick there. So, and even people are more focused, and their interest have suddenly, defense space has always been, one of the top picks of every investor. But since that move, people have started shifting towards it even more. So for somebody who has invested in this counter and wants to stay invested, is a short-term, investor. So what would your suggestion to him be? Currently, if I look at the, numbers that it's trading at 2091 and was also down in trade today over 2%. So what suggestion do you have there?
If he has already purchased and invested in the stock, I'll suggest him to wait some more time. I am seeing some more correction here. Some profit taking is pretty much likely. 1850, 1900 is a zone where I'll prefer to take a position for even for a short term and for a long term perspective also. So as he has mentioned, he already has a position. I'll advise him to hold on to it, keep a closing stop at 1800, and if the stock takes a dip closer to 1900, 1850 odd mark, he should consider averaging the position and just sit tight.
Okay, okay. Thank you so much for that view. Now we are joined by another caller from Mumbai itself. Hi, Lakshmi Narayana.
Hi, ma'am. Good evening.
Good evening. How can I help you today?
Yeah, actually I bought Divgi Torq Systems 300 shares at the average price of 670.
Okay.
Long back.
Yeah.
Whether I need to hold or I need to exit. I have a confusion on that.
Okay, so you bought it at 667 and currently it's trading at 588, and you are sitting on a loss, is what I can see, of almost 25,000 there. So for how long are you planning to hold, if at all?
Yeah, I'm planning for next 1 year.
1 year. Okay, okay. So Gaurav, is it advisable for Lakshmi Narayan to stay invested in this counter for 1 year, because currently the stock is seeing a beating and it has fallen significantly from the levels that he bought at. So are you seeing any sort of positive momentum in the near future?
Yes, the stock is consolidating just above its 200 period exponential moving average, which is a very positive sign. Its 50 and 200 period averages are also placed pretty nearby at around 540. So this will provide a much needed support for the stock in case of any eventuality and it turns down. So I think he should hold on his position, and if he, as he's saying, he can hold it for an year and a half time frame. So I think a level close to 750 to 800 zone is pretty much possible.
Okay, thank you so much for that. Now we are joined by Raja on the phone line from Chennai. Hi Raja, good evening.
Hi, good evening. I bought some shares of J&K Bank for 108.47.
Yeah.
Around 700 shares.
Yeah.
Do you think I got to hold on to it, or because this morning I think it was little wavery?
Okay,
so do you think?
Yes, so J&K India is the counter, am I correct?
Yeah, correct.
Okay, and you bought it at 108. Currently, it's trading at 354. So you have made some significant profits there, Mr. Raja, is what I can see. Gaurav, is it advisable for Mr. Raja to stay invested in this counter, or should he be booking his profits as of now?
If the stock is J&K India, then I'll advise him to exit. But if he's holding Jammu and Kashmir Bank, then he should consider holding his position. He can even consider adding more.
Yes, because when I confirmed, Raja, again, if you're there on the phone line, is it J&K India or J&K Bank?
It is J&K Bank. 108.40, yeah.
Okay. So J&K Bank currently, currently it's trading at 108, and it's hovering around the similar levels that Mr. Raja has bought. I'm sorry for that. We confused it with J&K India. But having said that, Gaurav has given his opinion on the counter, and let's go across to another caller now who's joining us from Bengaluru. Hi Prakash, good evening.
Good evening, madam.
How are you doing today, Prakash?
Yes, madam, doing good, madam.
Okay, so please tell me about your query.
Madam, I bought a BSE stocks at the rate of 3,006 rupees, 3,006. 10 quantity is 10 shares. I bought it, madam. I wanted to know should I average it now or should I hold it, madam?
Okay, and are you a long-term investor, Mr. Prakash?
No, madam, just short-term investor.
Short-term?
Just a month back. Yeah, a month back I bought it. When it was a peak, actually, I should have not entered. But when it was a movement, so I bought it, ma'am.
Okay. So, Gaurav, did Prakash make a good move by, entering the stock at 3,006 levels, because currently it has dropped down to 2,800 odd levels. So, are you seeing any sort of uptick so that he can actually mend his losses there?
Firstly, he has made a good choice by identifying BSE as a stock to buy. He just needs to adjust his holding period. If he can keep the stock for the next couple of quarters, I think by that time NSE would list and we would see another round of buying in this stock. So, it is very difficult to say whether for specifically a 1 month period, what would be the stop loss. If he is in need of money, in a month's period, then just take a stop at 2,500 and go on holding the position. Otherwise, from my side, BSE is a long-term story. Rather, all the stocks related to this particular sector, to the stock markets, to the CDSLs, the CAMs, BSE for that matter, MCX also, they are all worth investing for a long-term period. We are yet to go a very, very long way as far as equity markets and asset classes are concerned.
Okay, so yet to go a very, very long way, and BSE is one such counter that's attractive for long-term investment purpose. And with that, we are joined by a caller from Hyderabad. Hi Bindu, good evening.
Hi, good evening.
How can I help you, Bindu, today?
I want to invest 2 lakh corpus in defense sector.
Okay.
Are
you having any sort of, have you narrowed down any stocks?
Yeah, I want to invest like in Garden Reach or like data patterns.
Okay. So you want...
Or you can suggest, or if you want, if there is another stock, you can suggest me.
Okay, but in the defense space, right?
in the defense space.
Okay. So I'll get your query answered. Although, Bindu, are you a long-term investor or a short-term?
Around 6 months to 1 year.
Okay. So probably mid-term view on the counter. So Gaurav, if you could help Bindu, she has a corpus of 2 lakh rupees and she wants to invest in the defense space, although she has narrowed down 2 counters, GRSE and data patents. So should she be, investing in either these 2, or do you have any other recommendations there?
Firstly, let's talk about these 2 stocks only. Both come from the similar defense space. You have already talked too much about it, so I need not add up to it. As far as charts are concerned, for both these stocks, I'll wait for at least 10-15% odd dip to take a fresh entry. I am not at all interested in buying these stocks at the current levels. They've already shot up too much, and defense, again, it is a long-term story. They have just started a journey. We have to look at the defense stocks from a 2, 3, 4 years long-term perspective and not a short-term trading perspective. They are not at all trading stock. It was just a matter that they just started their up move. Their case may be that, a year and a half back, railway stock rallied too much and they multifolded in one single year. The same pattern was seen in defense stocks this year. So we need to maintain a very cautious approach here. They are all trading at their lifetime highs. They have already doubled. So it is better to wait for a dip here than to take a fresh entry. Apart from that, PSU banks are certainly good to hold. Housing finance companies can also be considered. So I am expecting in the later half of the years, the businesses related to loans will start being benefited from the declining, the rate cut, 1% rate cut that we have already seen. So these spaces can be considered for at least, if you are having a 3 to 4 quarters kind of a view.
Okay, thank you so much for that wise advice there, Gaurav. And with that, we are joined by a caller on the phone line from Nagpur. Hi, Uday. Good evening. Uday, are you there on the phone line? Yes.
Yes.
Please go ahead with your query, Uday.
I am having 1,000 number of container corporations here.
Okay.
With me.
Yeah.
So whether they are to be retained or sold, and may I get the bonus share, and how much will it be?
Okay. And are you a long-term investor, Uday, or a short-term investor?
I am a long-term investor.
Okay. And when did you purchase these shares?
I have purchased it just last year.
Okay, last year. All right. So, Gaurav, he bought it at 746 last year. Currently, it's trading at 754. He has made some decent profits there, 8,000 rupees. But do you advise Mr. Uday to stay invested in Container Corporation for another year or so? Or do you have any other recommendations?
Currently, Container Corporation is trading pretty low from its recent top. So exit is nowhere he should consider. He should go on holding on to it. If he has some spare money, he can even consider averaging the stock at these levels. Stop loss is placed very nearby, just around at 650 levels. He can maintain a stop loss. But since he is a long-term investor, so he can simply go on holding the stop. I expect by the year end, he should see levels close to 850 or maybe even 900 is possible.
Okay, thank you so much for that. And with that, we have a WhatsApp query. Anupama holds 1,200 shares of Bank of India. Again, Bank of India, has come up at 128, and she's asking whether she should hold or sell the counter. But although we have discussed about Bank of India earlier, Gaurav, I'd like you to shed more light on the PSU banking space in particular. What's your sense on that? And if you have any top 3 picks in the PSU banking space?
Yes, we prefer PSU banking space. They are available at very attractive rates. The valuation are also pretty attractive, so we find this space really lucrative. Then we talk about our best picks. Canara Bank leads The second one is State Bank of India. So these two are my favorite picks within the PSU banking space. Apart from that, even stocks like Indian Bank are also pretty good. Jammu and Kashmir Bank, we have already talked about. They can also be considered. And yes, Bank of India. So these are a mixed pack, more or less. All the the larger PSU banks, I would say, are good for an investment purpose.
Okay. Thank you so much for that, Gaurav. But I'm afraid that, we'll have to wrap up the show at this particular time. But thank you so much for your time and you patiently answering all the questions despite being, fundamental queries also on the show. So thank you so much, Gaurav, for your time. And viewers, that's a wrap on Ask Profit today. But stay tuned to NDTV Profit as there's more lined up ahead for you all.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world.
Joining in now, founder of Envision Capital. Nilesh, we always enjoy our conversations with you here on NDTV Profit, so thank you so much for coming in. What is the market mood that you're seeing right now? Tariffs was a big concern. We seem to have shrugged that off. World War III, market doesn't seem to care too much. Operation Sindoor, okay, we'll worry for a couple of days. I mean, is this, you know, I don't want to try and sound Gen Z, but is this market delulu or is there something solid going on over here?
No, well, yes, there are some of these speed breakers, hurdles, headwinds along the way. And what we've really seen is all these geopolitical conflicts have been very episodic. They are something which probably lasts for, probably a couple of days, maybe a week. And then after that, basically, there is pretty much peace. So to that extent, I think somewhere the market is beginning to realize that this is something which seems to be very short-lived, though very episodic, but it's still very patchy, very short-lived. And market is taking all of this in its stride. In the process, what's also happening is the collapse of crude. That's something which is probably the biggest positive that's going for India right now. That we have basically crude prices which are significantly lower. That's doing a lot of good to India's macros. We've seen rate cuts happen, liquidity kind of getting unleashed. And all of this is improving micros at the ground level, which I think augurs well for company earnings. So clearly what's happening is that there is increasing uncertainty in the world, but basically all of that is having a rub-off effect in terms of positives for India. And that's something which basically the market is more focused on than some of the geopolitical issues which are become an overhang for some time now.
Okay, Nilesh, good morning. So, are we to say that the risk assets are now squarely looking at earnings trajectory and multiples and discounting this episodic period simply because there will be noises in the longer term and therefore ignore the short-term noise and focus squarely on the long term?
Absolutely, Neeraj. Clearly, the markets are more focused on the long term. And that's because, firstly, the markets itself have been consolidating since September or October last year. So it's pretty much been a 9-month consolidation that the market has already gone through. It's not that, yes, the markets are now inching towards a high and all of that, but nevertheless, for 9 months, we've been more or less flattish. There have been some sectors or categories or some pockets which have done better and are at a newer highs, but overall at the index level, we still seem to be essentially where we were 6 or 9 months ago. So to that extent, the markets have already undergone a time-wise correction and a consolidation. So that to that extent, I think is a very, very big positive from purely sheer market levels. Secondly is that the faith of retail investors continues to be unabated. And so to that extent, the allocation to equities has only been increasing. And more importantly, is with falling interest rates on bank deposits, the case for long-term equities becomes even stronger. The third is a move by the foreign investors towards de-dollarization. And clearly, India has been one country where allocations have been underweight the weight in the MSCI. So to that extent, again, you've seen foreigners starting to come in, but expectation that they could come in a bigger way. And lastly of all, corporate earnings are dealing with a low base. I mean, just to flash back last financial year, we had probably one of the most modest GDP growth. And so to that extent, we are dealing with a very low base. So optically, for June and September quarters, we actually could see earnings, headline earnings, get into the double-digit zone. So these are some of the factors which I think the market is really more focused on than the geopolitical challenges that the world faces.
Actually, Nilesh, that's a pertinent point, right? We were talking to so many people, or trying to ask so many people, that the first half of, at least for the Indian markets, right, the first half, which is Q1 and Q2 of FY26, will have a really favorable base, right? And therefore, does that incremental growth number look positive enough for the markets to take heart from, or do people focus on the absolute number and then try and say, hey, maybe growth isn't as good because the advanced tax numbers were not very strong?
Sure. So Neeraj, I probably think that more on a slightly time adjusted basis, but broadly we would have earnings growth of about maybe 10 to 12%.
Okay.
Which is not a bad situation to be in, because just generally from an opportunity cost point of view for investors, it's more like kind of, the 6% which bank deposits offer. So if you have corporate earnings at 12%, it pretty much takes care of a couple of years of returns, even if 1 year has been kind of flat types return. So there's a kind of a catch-up trade which typically happens with equities. Equities don't behave in pretty much a linear fashion all the time. So there's a bit of catch-up which happens. So clearly kind of going back to saying is that the 9 months have been very flattish. So to that extent, you will see some kind of a catch-up trade happen for the next over the next 1 or 2 quarters. And that will also kind of get mirrored through the earnings growth which we will have. So even if I think the headline or the big companies, the large caps, deliver as a group 10 to 12% kind of earnings growth, I think that should at least protect the downside as far as equities go.
Nilesh, what's leading this charge? What's leading this charge in your view and the next leg of this rally? Is it going to be financials? Is it going to be a consumption theme? Is it going to be a capex push theme? Where are you seeing that momentum?
It's going to be all of these factors. Number one, of course, for the financials, especially the large banks, the last few not necessarily been very good. They've again they have underperformed as stocks or as a category. So you again seeing a lot of catch up, and then there's some bit of an upside coming in because there's expectation that if foreign investors were to come in a very big way, a lot of that incremental allocation would go into banks because that's the easiest place to deploy whatever millions and billions of dollars. So I think clearly that's one. Two is, regarding consumption, we have a situation where there's now lower inflation, leaving more money in the hands of consumers. There's low interest rates, which makes the case for rate sensitives to do relatively better. Third is all of the kind of policy initiatives which have happened, which is increasing the tax exemption limits for India's middle class, number one. Number two, the pay commission, which is expected, the impact of pay commission, which is impacted. All of that, and then some of the benefits coming in from various welfare schemes announced by the state governments. All of that is kind of likely to kind of bunch up in the next few months or the next few quarters. So clearly, I think consumption again stands to gain. Consumption also stands to gain because raw material costs could be lower, which could drive up margins. So I think there's a case for both volume increase, there's a case for margin increase, resulting into stronger earnings. Third is the capex side, and capex including defense, aerospace, EMS, all of those pockets within the overall capex and manufacturing space. That's again a space which is expected to do well because of larger increase spending. Last year, keep in mind, was a relatively tepid year from a spending point of view. A lot of all of that could play a catch up in the current financial year and even beyond. So I believe that it's going to be a combination of all of these, which are going to essentially be driving economic growth as well as earnings growth.
You spoke about defense. I'm wondering how you're feeling about railways, Nilesh, because just in that, taking that forward, railways, road, there was a bit of a pullback in the kind of spends over there in government schemes. Do you see that firing, and do you see the defense rally done and dusted with?
Well, for the very short term, the defense rally, one could basically argue that it's done with because there's been a sharp up move. So to that extent, and yet, yes, there's been the start of order inflows, but it's not yet as much to basically warrant the valuations in the very short term. A lot of stocks are already beginning to trade between 50 to 100 times trailing earnings. So to that extent, and then there's been a sharp up move of between 50% to 100% from the lows that we saw in February, March. So probably in the very short term, it seems to be done. But clearly, I would think of defense being more a decadal story. I think the whole need to kind of spend on defense and then to kind of back that up with a huge bout of indigenization, which means to procure locally from domestic firms. I think that's basically a very, very long-term growth driver for our defense and aerospace companies. So I would probably think that it's become now, yes, for the very short term, you could say it's done. But I believe defense is now becoming more a buy on dips kind of a sector. Regarding railways, I would clearly think that defense is likely to take precedence over the railways, because firstly, there's a much wider choice of companies to invest in. In defense, you could probably see, there are dozens of companies, versus that railways, it's a very small handful. And clearly, I think the spending on defense is going to be significantly higher over maybe the next couple of years versus railways. I clearly think between defense and railways, it's going to be more like a snake and ladder. There would be some phase during which defense does well, some phase which railways does well. On the whole, the two put together is a great place to be from a very long-term perspective.
Is that a rally you managed to catch, Nilesh? Because, we speak to people and some, managed to get it in time and some didn't.
Honestly, it's always dil mange more. You never have enough when things go well. And like as George Soros says, when you get it right, you better get it right big time. So honestly, yes, not to the extent one would have wanted.
Okay. Nilesh, the other question is, when Nandan Nilekani says that it is amongst the most challenging times for the business, you stand up and take notice, right? What did you make of what Nandan is saying? What did you make of your own conversations with maybe your portfolio companies or global companies and your readings? I mean, how does Indian IT fare over the next 12, 18, 24 months in such a fast changing landscape?
So, I would tend to agree with, Nandan's views in terms of what he thinks about what's really happening in the global business landscape or the global economic landscape. The global economic landscape stands truly challenged. And somebody like Nandan, who's essentially looked at, the era from the 1990s onwards, where we basically began that era by saying the world is truly flat. Okay, from that now getting into that there is now increasingly deglobalization, countries are behaving in terms of silos. So I probably think his statement is more in the backdrop of that no longer is it now easy to conduct trade on a global basis, number one. Number two is, I think, purely from a technology point of view, and I would probably say that most businesses which are more world facing or global facing, I think I have to kind of deal with lower growth, slower growth, especially in a relative context where the domestic economy seems to be doing a lot better than the global GDP. And two is, we have pockets like CAPEX, infra, defense, railways, domestic consumption, premiumization, all of those as businesses are growing in double digits versus global businesses growing in low single digit. And that creates a headwind for the larger Indian IT companies. I think the larger Indian companies have been growing in single digits for maybe the last decade or so, especially when the world was a lot more benign place, versus that the next decade doesn't seem to be as benign as what the last decade has been. So to that extent, I think for the larger IT companies, they truly have a challenge in terms of sustaining growth. And second is essentially the whole wave of AI, which is coming in, which is driving the world towards more automation and all of those kind of things. And that can make it even more challenging for the bigger IT companies. And therefore, within the world of IT, probably the smaller IT companies, which are more focused, more niche, are becoming specialists in AI implementation. They probably will do a lot better versus their peers, versus their larger peers.
Okay, Nilesh, I'm just wondering, I would like to know your view on this spree of promoter stake sales we're seeing. And it's as if most of them are successful, frankly. The promoters are selling and maybe large investors, mutual funds sitting on the other side. So two-part question. What do you make of this trend? Are you biting at some of those offers out there? And okay, I'm adding a third. What do you say to people who say that these are promoters cashing out when a market is at its peak?
Yes, I think yes, all of that is true, Tamanna, and but it's also creating basically supply for the domestic mutual funds. I think they are the guys who essentially have been sitting on a lot of liquidity. They are receiving money through SIPs. The SIP flows still are in the ballpark range of 15 to 20,000 crores. So there's money to be deployed, and clearly, I think if they were to kind of go out there and buy directly into the market, obviously that will create its own. It will create another bubble or so. Versus that, I think when you have these kind of supply coming in from promoters, from the larger private equity funds or some of the other earlier investors, I actually think it's a nice balancing of demand and supply which is happening in the market. And so to that extent, I actually think this is very orderly and very, very healthy. Yes, promoters are always the biggest insiders of their businesses, and they probably know their business best and therefore the valuations. But I think for many of them, these are first generation entrepreneurs who have essentially come in, set up businesses 10, 20, 30 years ago. And they also essentially want to take some money off the table to kind of create security for themselves and their families as well. I think that's really been the most common kind of reason why some of the promoters have been selling. Of course, the underlying reason could partly be valuations, but keep in mind, they're not selling out lock and stock and barrel. If a promoter owns 50% of his company and is going out there and selling it 5%, I still think that's like, he's still got more skin in the game versus what relative to what he's selling out. So to that extent, I would probably I would look at more the positives rather than any kind of having any concern that promoters are selling.
Okay. Nilesh, the final word would be the new Reserve Bank of India led tailwinds for NBFCs. You reckon that the next 12 months, it's that one sector there could be many, but it is one of the sectors to ride on because the growth numbers could look strong?
Absolutely, Neeraj. If there's one strong pocket within the entire market and within the entire financial space, I think NBFCs, affordable housing finance companies, and some of the smaller banks, I think this collectively, I think is probably one of the most strongest kind of segments of the market from an outlook point of view. This is the segment which essentially has had to deal with higher interest rates in terms of paying out higher interest rates, in terms of a much weaker liquidity or a poorer liquidity. And so to that extent, they have been facing some headwinds. All the policy initiatives from the Reserve Bank of India over the last few months, I think converts those very headwinds into tailwinds and creates an opportunity for them to grow, number one. Number two, especially some of the businesses which are more consumer facing, especially areas like affordable housing finance, they will also have the benefit of the tax exemption limits which have been high, which would make the middle class households eligible for more loans. So to that extent, that creates a bit of an organic growth opportunity for them, that if earlier you could give a home loan of say 15 lakhs, you would now be able to give a home loan of 18 lakhs or 20 lakhs. So all of these things essentially, I think, augur extremely well for this pack of housing finance companies, NBFCs, and the smaller banks.
Okay. Nilesh, always a pleasure talking to you. No different today. Thank you so much for taking the time out and speaking with us.
Joining us on the show today is a veteran investor. He's come up with an interesting book which is called, and in fact it is a young investor's guide to wealth and happiness from here on. It's the Book of Wealth. Mark Mobius, co-founder Mobius Capital Partners, joins us to discuss more. Mark, good afternoon and welcome to the show, and a pleasure to speak to you as always, and always a pleasure to read everything that you write about. First, what has been your motivation to come up with the Book of Wealth? Because you've been writing since quite a few years, and the number of books I think I myself have read, probably a dozen out of the ones you've written. What has been your motivation on this one?
Well, I wanted to reach out to the young people, people who are graduating from high school or middle school and going into college and so forth. To write something that will give them some guidance as to how to build their wealth. And of course, one feature of the book is that I talk about health as well, because I tell people wealth is nothing without health. So you got to have both. And I talk about that in the book as well.
What has been your best learning whilst writing this book? One, from a market's perspective, And two, from a personal life perspective, because I'm sure a lot of exploring that happens as well.
Yeah, well, the key, of course, is continuous learning. Even though I've been to university, I have a PhD and so forth, it means nothing unless you continue to learn and to be interested in other things. And one of the reasons why I travel a great deal is because it gives me an opportunity to learn about what's happening in other parts of the world. So I think that is I would say, the key to being wealthy and also having a good life, learning and keeping an open mind.
Right. You mentioned about travel, Mark, and I think from 1999 to 2012, from the number of books that you've written, a couple of them you have Passport to Profit. I think you traveled extensively, if I'm not mistaken. 8 months of travel, globetrotting is where you went, and you actually were able to find the hidden market bargains overseas. From this book as well, any gems that you were able to find and give advice to investors?
Well, in the book, I outlined the different ways that you can invest, in currencies, in gold, in property, etc. I give them a menu of where you can invest. But the conclusion of all this is that equities, in other words, investing in shares of companies, is the best, because companies basically are working for you. The managements of companies are working for the investor to grow their wealth. And companies in a diversified portfolio will have a very good return over a long period of time. So that is, I think, the key to having a very good portfolio, being wealthy. Of course, gold is something that I think everyone should have, physical gold. But after that, I would say it would be your own house, in other words, a place to live, to own your own house, and then equities in companies.
Okay, so, when you talk about, what you've mentioned in the book, you've clearly gone ahead and demystified the various financial instruments that probably a young investor can use whilst starting their investment journey. From stocks to bonds, you're talking about alternative assets as well. What would your pecking order be in terms of allotting wealth or allotting your funds right now to create wealth?
Well, I would say, first of all, it should be over 50% in equities, in companies' shares, and then the rest divided into maybe 10% in gold, and then maybe 20% in property, and the rest in other investments such as commodities or in other like platinum. I don't know, you've noticed that recently palladium and platinum are very good investments, similar to gold. But that would be the rough breakdown, I would say, in terms of someone's portfolio.
Okay. Let's go back to a little bit of history in terms of all the books that you've written. Specifically, I was just going through Invest for Good as well. I think that was full of a lot of entertaining and informative anecdotes that you gave from your day-to-day experiences as well in the world of sustainable investments. From the current one, any such anecdote that you would want to highlight?
Yes, I think the most important anecdote or the most important lesson is that you've got to look at the people behind the companies in which you're investing. In other words, of course, you look at the balance sheet, you look at the profit and loss statement, but the key is who is running this company, who owns this company, and what is their ethical makeup? In other words, are they going to do well by you as an investor, as a minority investor, or are they going to treat the investor badly and maybe make some mistakes and go against the law or do things that would be not in the interest of the minority investors? So I always tell people, look behind the curtain. Who's running the company? Who is owning the company? And get a good understanding. Just don't look at the financials.
Don't look at the financials alone. That's the key. Mark, let's tie this up to all the books that you've written, the knowledge that you're imparting to young investors, to what's happening in the current markets right now. If you have to look at India as a place, where would it be in pecking order? Because I know you have been absolutely positive in terms of India. In fact, the last time we spoke as well, you did mention you're looking at a new fund where majority of it will be India focused, but you were looking at a couple of approvals to come through. Where are you on it? And then we will discuss how to tie both of these together.
Well, India, of course, is number one in my view. I want to invest a substantial portion of this new fund in India. And of course, the reason for that is that India's got so much things going for it. First of all, young population of 1.2 billion, a government who is digitizing and trying to raise the standards in the country, a more unified country coming together. All these factors are so important and make India really tops in my view. And by the way, one of the things we look at, of course, is economic growth. If you invest in a country like India, which is growing at 6 or 7%, you will know that the companies in that country, in India, for example, would be growing at double that rate. That's usually the case. You can look at a 7% growth and you probably have 14, 15% earnings growth in the companies, in good companies. So that's what we're looking at. We hope to get approval to invest in India within the next month or so, and then we can begin to really fill the portfolio. Right now, we have 50% in cash, so we're ready and waiting for this opportunity in India.
Thank you so much for joining us, and see you soon, Mark, for talking to us with regards to the books that you've written and the kind of opportunities you're tying for young investors with what's happening in the markets.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Nifty trades above the 25,500 mark, gaining more than 1% for the day. Benchmark indices outperform the broader market indices. Nifty Metal becomes the top gaining sector, gaining more than 2% for the day. SpaceX's Axiom 4 mission carrying ISRO astronaut Shubhanshu Shukla docks at the International Space Station around 4:45 p.m. IST, and crew members entered the orbital lab around 6 p.m. this evening. After blocking supplies of rare earths, China now blocks supplies of specialty fertilizers to India, which has led to shortage and rise of fertilizer prices in India. The CBI launches nationwide searches at 42 locations to crack down on mule bank accounts being used in cyber frauds. 9 suspects have been arrested and around